Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. Today's discussion focuses on an important economic development coming out of Iraq that could have meaningful implications for the country's financial stability, government revenue structure, and the ongoing efforts to stabilize the Iraqi dinar. Recent reports suggest that customs automation and tariff reforms are beginning to produce measurable results, particularly in reducing the demand for US dollars in Iraq's parallel currency market. According to economic analysts, this shift may represent one of the clearest signs, yet, that Iraq's broader economic reform strategy is starting to gain traction. To fully understand why this matters, it is important to first look at the long-standing challenges Iraq has faced regarding its currency system and dependency on oil revenues. For many years, Iraq's economy has been heavily reliant on crude oil exports. Oil revenues have consistently represented the overwhelming majority of government income, making the economy vulnerable to fluctuations in global oil prices. Whenever oil prices decline, Iraq's budget comes under pressure, public spending becomes strained, and economic uncertainty increases. At the same time, Iraq has also struggled with a large informal financial sector and a persistent gap between the official exchange rate and the rate seen in the parallel market. The parallel market, often referred to as the black market, developed partly because of weak regulatory oversight, inefficient banking channels, smuggling operations, and heavy demand for US dollars from traders and importers. This created ongoing pressure on the Iraqi dinar and complicated the central bank of Iraq's efforts to maintain currency stability. Now, according to recent economic commentary, customs automation reforms may be changing some of those dynamics. The introduction of automated customs systems and tariff collection mechanisms appears to be improving transparency at border crossings and reducing opportunities for corruption and underreporting. In practical terms, that means more import transactions are being officially documented and processed through legal financial channels instead of operating through informal networks. This is a very important point, because Iraq's demand for dollars has historically been tied closely to import financing. Businesses and traders often needed large quantities of US currency to pay for goods coming into the country. In many cases, loopholes in customs and financial systems allowed some actors to exploit the process, creating excess demand for dollars that fueled the parallel market. If customs automation is successfully reducing those loopholes, then Iraq may finally be seeing a more controlled and transparent flow of foreign currency transactions. That would explain why some economists are reporting that demand for dollars has dropped significantly. A reduction in speculative or artificial demand for dollars can help narrow the gap between the official exchange rate and the parallel market rate, which has been one of the Iraqi government's major objectives over the past several years. For Iraqi dinar followers, this development is noteworthy because exchange rate stability is one of the foundational requirements for broader monetary reform. It is important, however, to approach this topic carefully and realistically. Some observers immediately connect any positive economic reform with speculation about dramatic currency revaluations or sudden wealth scenarios. But in reality, currency reform is usually a slow, complex, and highly controlled process that depends on multiple economic indicators: institutional reforms, fiscal discipline, and international confidence. What makes the current situation interesting is not necessarily the idea of an overnight currency event, but rather the evidence that Iraq is gradually strengthening the infrastructure needed for a more stable and credible financial system. Stable customs revenues, improved transparency, better banking compliance, and reduced pressure on dollar demand are all factors that can support confidence in the Iraqi dinar over time. One of the biggest themes emerging from this story is diversification of government revenues. Iraq has repeatedly stated that it wants to reduce its dependence on oil income. For years, economists inside and outside the country warned that relying almost entirely on petroleum exports was unsustainable in the long run. Every time global energy prices dropped, Iraq faced budget deficits, delayed projects, and economic stress. By improving customs collection and implementing tariffs more effectively, Iraq may finally be creating alternative sources of state revenue. While customs income may never replace oil revenues entirely, it can still play an important role in stabilizing the national budget. More diversified revenue streams give governments greater flexibility and resilience during periods of economic volatility. This matters for currency stability because governments with stronger and more diversified finances are generally in a better position to defend their currencies, manage inflation, and maintain investor confidence. If Iraq can consistently generate more non-oil revenue, it reduces pressure on the state to rely exclusively on oil exports or external financing. Another critical aspect of this reform effort is the relationship between customs modernization and anti-corruption initiatives. Iraq has faced long-standing criticism over corruption at border crossings and within financial institutions. Revenue leakage, fake invoices, smuggling operations, and weak oversight have all contributed to economic inefficiencies. Customs automation can help reduce human manipulation in the system by digitizing processes and increasing traceability. When transactions are recorded electronically and linked to official banking channels, it becomes more difficult for unauthorized currency movements or fraudulent trade activities to occur unnoticed. This is especially relevant because international financial compliance has become a major priority for Iraq in recent years. The United States Federal Reserve and international financial regulators have placed increased scrutiny on dollar transactions flowing through Iraq's banking system. Iraqi authorities have responded by implementing stricter banking controls, improving compliance standards, and attempting to modernize financial operations. Although these measures initially caused frustration among some traders and businesses due to tighter access to dollars, Iraqi officials argued that the reforms were necessary to protect the financial system and prevent illegal currency outflows. Now, if customs automation is reducing unnecessary demand for dollars, while also improving legitimate trade documentation, that could indicate the reforms are beginning to produce more balanced results. In other words, Iraq may be moving toward a system where foreign exchange demand is increasingly tied to real economic activity rather than speculative or unofficial channels. From a short-term perspective, this could support greater exchange rate stability. If demand for dollars continues to decline while confidence in official banking channels improves, the Central Bank of Iraq may have more room to manage monetary policy effectively. A narrower spread between official and parallel market exchange rates could also help reduce inflationary pressure on imported goods, which directly affects everyday consumers. Lower inflation and more stable pricing would be particularly important for Iraqi households, many of whom have faced rising living costs over the past several years. Economic reforms are often judged not only by financial metrics, but also by whether ordinary citizens feel improvements in their daily lives. If reforms contribute to more stable prices, improved services, and stronger employment conditions, public confidence in economic policy could gradually increase. For businesses operating inside Iraq, increased customs efficiency may also improve trade predictability. Companies generally prefer systems that are transparent, consistent, and less vulnerable to arbitrary delays or corruption. Improved customs processing could encourage more legitimate trade activity and potentially attract additional investment over time. Foreign investors often look closely at institutional reforms before committing capital to developing markets. Issues such as transparency, regulatory consistency, banking compliance, and currency stability all influence investment decisions. Iraq has significant economic potential due to its natural resources, strategic location, and young population, but unlocking that potential requires long-term structural reforms. This is why developments like customs automation matter beyond the immediate currency discussion. They may appear technical on the surface, but they represent part of a larger transformation effort aimed at modernizing Iraq's economy and financial governance. Now, regarding the discussion surrounding the so-called parallel market coffin, it is important to maintain a balanced interpretation. While recent improvements may indeed signal meaningful progress against illegal or unofficial dollar trading, it would probably be premature to declare the parallel market completely eliminated. Parallel markets often persist in economies where confidence gaps, regulatory inefficiencies, or supply constraints remain. However, if Iraq continues strengthening oversight, increasing transparency, and improving banking accessibility, the influence of the parallel market could gradually diminish over time. Sustained reform implementation is the key factor here. Temporary improvements are positive, but long-term credibility depends on consistency. Another important consideration is regional and global economic conditions. Iraq's financial system does not operate in isolation. External factors such as oil prices, geopolitical tensions, global inflation trends, and international monetary policy all influence Iraq's economy and currency environment. Even with successful domestic reforms, Iraq will still need to navigate external risks carefully. Oil prices remain especially important. Strong oil revenues currently provide Iraq with substantial financial support, allowing the government to fund projects and maintain reserves. But policymakers understand that relying solely on oil creates vulnerability. That is why reforms targeting customs revenue, taxation, infrastructure modernization, and private sector development are receiving increased attention. For IQD followers, the most realistic way to interpret this news is as a sign of gradual institutional strengthening rather than immediate dramatic currency transformation. Stable currencies are typically supported by strong institutions, disciplined monetary policy, diversified economies, and credible financial governance. Iraq appears to be attempting to move in that direction. Through a series of interconnected reforms, the Central Bank of Iraq has repeatedly emphasized stability, compliance, and modernization, rather than sudden monetary shocks. Maintaining confidence in the banking sector and protecting foreign reserves are usually higher priorities for central banks than pursuing rapid exchange rate changes. That is why most serious economic analysts focus more on structural progress than on speculative timelines. At the same time, it is understandable why many Iraqi Dinar observers pay close attention to reforms affecting the parallel market. A large gap between official and unofficial exchange rates can undermine confidence in a national currency. Reducing that gap is generally viewed as a positive sign because it suggests improved market efficiency and stronger policy control. If customs automation truly continues cutting unnecessary dollar demand, Iraq could see several broader economic benefits over the medium term. These may include stronger foreign reserve management, improved fiscal balance, better investor confidence, more predictable import pricing, and increased effectiveness of monetary policy tools. In addition, reforms that increase government revenue collection may allow Iraq to invest more consistently in infrastructure, energy projects, transportation systems, and public services. Economic diversification is not only about generating revenue outside the oil sector, it is also about creating sustainable employment opportunities and building a more resilient economy capable of long-term growth. Younger generations in Iraq are especially important in this equation. Iraq has a rapidly growing population with significant demand for jobs, education, and economic opportunity. Long-term stability depends on creating an environment where the private sector can expand and absorb labor demand beyond government employment. Financial reforms alone cannot solve every economic challenge, but they can create conditions that support broader development. Efficient customs systems, stronger banking compliance, and transparent financial processes all contribute to building trust in institutions. Trust is one of the most valuable assets any economy can have because it influences investment decisions, consumer confidence, and currency stability. Another angle worth discussing is how international institutions may view Iraq's progress. Organizations such as the International Monetary Fund and World Bank have consistently encouraged Iraq to pursue structural reforms, improve governance, and diversify its economy. Demonstrating measurable progress in customs modernization and revenue collection could strengthen Iraq's credibility with international partners. Improved credibility can lead to better financing conditions, stronger technical cooperation, and increased confidence among foreign businesses considering investment opportunities in Iraq. Over time, this can contribute to economic growth and reinforce the country's broader modernization efforts. Still, challenges remain. Iraq continues to face political complexities, infrastructure limitations, bureaucratic inefficiencies, and regional uncertainties. Reform implementation is rarely smooth or linear. There may be setbacks, delays, or resistance from groups benefiting from older systems. That is why sustained political commitment is essential. For now, the reported decline in dollar demand linked to customs automation appears to be a constructive development worth monitoring closely. It suggests that at least some reform measures are beginning to produce tangible economic effects, rather than remaining purely theoretical policy discussions. The key question moving forward is whether these improvements can be maintained and expanded. If Iraq continues strengthening financial oversight, modernizing trade systems, and supporting legitimate banking activity, the country may gradually build a more stable monetary environment. For Iraqi dinar watchers, patience and realism remain important. Economic reform is typically measured in phases, not overnight transformations. Positive developments should be evaluated based on data, institutional progress, and long-term sustainability, rather than emotional speculation. At the same time, it is fair to recognize that reducing pressure on the parallel market and increasing diversified revenue collection are meaningful achievements if the trends continue. They represent movement toward greater financial discipline and economic normalization, both of which are essential for long-term currency confidence. Ultimately, this story is less about sensational predictions and more about the mechanics of economic reform. Customs automation may sound technical, but its implications touch trade efficiency, government revenue, banking transparency, inflation control, and currency stability. Those are all critical pillars of a functioning modern economy. As Iraq continues navigating its reform journey, observers will likely keep watching several major indicators closely. The gap between official and parallel exchange rates, the strength of foreign reserves, non-oil revenue growth, banking sector modernization, inflation trends, and the government's ability to sustain reforms over time. If progress continues across these areas, Iraq could gradually strengthen its overall economic position and improve confidence in the Iraqi dinar. But as always, responsible analysis requires separating confirmed developments from speculation and focusing on measurable economic fundamentals. Thank you for watching Iraqi Dinar News. If you appreciate responsible, factual, and balanced coverage of Iraq's economy and currency developments, make sure to subscribe to the channel and turn on notifications for future updates. And as always, this content is provided for informational and educational purposes only and should not be considered financial or investment advice.